About the rate of growth in cloud bookings. There has been a slowdown in that rate of growth. How much of that is by design, getting out of of certain businesses, and how much of that is a worry?
Yeah, thanks very much for the question and for having me. And let me start by saying clearly that I don't subscribe at all to the notion that our cloud business is slowing down. Actually, for the quarter, it has been up by 40% in terms of cloud revenues, and we are seeing 43% growth for the first half year. You are citing the cloud bookings performance, and I've made this point clear for a number of quarters now that we are seeing a weaker and weaker correlation between new cloud bookings and the actual revenue performance. That is due to the fact that we have pay-as-you-go, transaction volume-based business model in our cloud business portfolio at our SAP Cloud Platform, as well as in our business networks area that are not counted within the new cloud bookings, but have actually developed over the course of the last 1.5 years very positively. On the other hand, indeed, we see a structural and well-intended decline of our infrastructure as a service business. That is good for SAP. We have worked very hard with our hyperscale infrastructure partners like AWS, Microsoft Azure, Google Cloud, Alibaba, and some others to make sure that they can handle more and more SAP workloads on their infrastructures, which means that we can concentrate our own infrastructure as a service business on high margin opportunities where customers truly need to have an end-to-end white glove service from SAP. That is bringing the cloud bookings growth down a bit. Without this effect, it would have actually been up by 27%. And at the same time, it's very good for our cloud margins, which have increased by a steep 4 percentage points. So we are exactly on track in what we need in order to hit our midterm objectives to triple our cloud revenue by 2023, and the results in the first half year should provide proof to that.
So I just want to point out that Walter Pritchard, an analyst at Citi, says that he thought the cloud metrics were light and he was disappointed with margins. Also, the shares are trading down more than 6% on TradeGate in reaction to this earnings release. So what do you think shareholders and Walter are misunderstanding, and how can you set them straight?
First of all, I know Walter very well and I appreciate him a lot. He's an expert. But what I think he still underestimates is, on the one hand, the weakening correlation between bookings to revenues. If you take a more backlog-oriented view on our business, actually our cloud backlog has reached 10.8 billion by the end of Q2. That's a 32% growth. So this is perfectly in line with the trajectory that we need in the coming years. There is no reason to be concerned here at all. Also, the profitability in the cloud is steeply increasing, as we said it would. 4 percentage points in Q2. We are well on track with now 68% gross margins to meet our midterm target of 75% gross margins in the cloud by 2023. The one factor that we indeed saw a slowdown from Q1 was the operating margin progress. It was basically flat in Q2. For the half year, we are up by 20 basis points, and that might seem light, but I think it's important to note here that we are fighting against an acquisition-driven headwind from the acquisition of Qualtrics. This effect was a 40 basis points headwind to margins in Q2 and a 60 basis points headwind in Q1.
Okay, and Luka, we'll see then when the shares open what investor reaction we're going to get to this set of results. One investor that I know you'll be wanting to communicate with, activist investor Elliott Management, they revealed they have a stake in the company not all that long ago. What kind of influence is Elliott having on the business? What conversations, interactions are you having with that business?
Yeah, first of all, I said when we released Q1 numbers that I don't really like the notion of activist investors. We have active investors and we enjoy a very healthy dialogue with all of them. That includes Elliott, it includes our other institutional shareholders, and of course our founding shareholders as well. What they actually want is all the same and quite reasonable, so we have a very constructive dialogue. They like the growth trajectory that we are on, and they want us to continue on that path, and we do so with double-digit growth in Q2 and 14% growth in cloud and software revenues for the first half year. I think we are exactly on track to deliver that. And they want us over time to deliver greater efficiencies and therefore more leverage to the bottom line. And we are on that same path as well. When you take a look at the non-IFRS earnings per share performance for the first half year, we're up 17%. We are clearly making progress in our cloud efficiency. And we are very committed to embracing a full-fledged end-to-end operational excellence review program that we have launched, where we are supported by external partners and looking really at all of the end-to-end aspects of our operations for greater efficiencies. I think in the second half year you will see even more of those results coming to fruition, because the bar in terms of profitability from the last year is lower, and our operational effectiveness measures
Luka,
are going to take even more impact, and therefore we have very confidently reiterated guidance for the full year.
Luka, I wonder, President Trump has recently asked for more information on a very big, I think, $10 billion contract, cloud contract the Pentagon is going to award Amazon or Microsoft, locking others out. Would you like to be in there bidding for that, or do you not bother because of national security? And I wonder, Peter Altmaier has said he wants to build out the German European cloud services business. Have you been in talks with Altmaier on that issue?
Yeah. So first of all, I cannot really comment and should not comment on the business of others, including Amazon and their business with national agencies in the US. What I can say is we enjoy a very close and trusted collaboration with different US authorities. We have an own national security certified business in the US that does extremely well. And we are focusing on those areas where we can provide true value to governments around the globe, and that is mainly our applications business, where we have a very strong position in the market. As to the German efforts to establish a Bundescloud, of course, as a German domiciled company and one of the few, if not the only, global players in our industry coming from Europe, we are in close contact with the German authorities, and we offer our help and support and our values. Let's see what comes out of that. But suffice it to say that we believe we have to offer very secure, data privacy compliant cloud services, and that should be very appealing to customers here in Europe and of course also in Germany.